I am not a mutual fund distributor. I am not a financial advisor. I am not selling or promoting any products to you. The objective of this video is to explain the risks to all those of you who have invested in mutual funds. If you have lost your money, including the principal, in the last 4 weeks in the mutual funds, then this video is for you. Do not skip or forward this video. Watch the video fully. The key question here is, should you redeem all the units at the current price and get out of the mutual funds, or continue your SIPs? What do you have to do? Now let's look at how most people invest in mutual funds. It's mostly through mutual fund distributors. These distributors call themselves as investment advisors. I don't know why. Because they sell mutual funds. It's very seldom do they understand the process of creating wealth. They only sell a product called mutual fund. The real issue with most of us is we would like to get rich too soon. Let's remember that there are no shortcuts in creating wealth. What is required here is patience, and true long-term patience. And mutual funds truly are an excellent vehicle to create that long-term wealth. But then unfortunately, what happens is the distributors in the process are making a lot of money through commissions. Every time you buy units, a portion of your contributions is paid as commissions to the mutual fund distributor. You don't pay it directly, but then the mutual fund company pays your distributor a commission. This commission is as high as 2%, which is paid by the mutual fund companies. This commission is taken from your contribution. In addition to this commission, the mutual fund company also pays the mutual fund distributor a trail commission. This commission is about 1% of your net worth. This trail commission is paid to your mutual fund distributor even after you have stopped your payments. As long as you are invested in the fund, your distributor continues to receive the trail commission. Is it not a good deal for your distributor or the so-called financial advisor? In the process, who is the winner? Is it you or your financial advisor? Has your financial advisor disclosed the commission structure to you? If yes, then you are with an honest financial advisor or a mutual fund distributor. If not, you might want to think if you are with the right person. It is important to know that any investment that is linked to the capital markets is a risky investment. But then the key question here is, how much is the risk? It is the responsibility of the mutual fund distributors to disclose the risks and make the client fully understand that any investment in the mutual fund is long term, and long term here is 8 to 10 years or even more than 10 years. The distributor needs to inform the client that the returns are not linear like the fixed deposits offered by the banks. These are the returns that are linked to the capital markets. The client should not expect a guaranteed annual return or anyway close to guaranteed annual return which are offered by the bank fixed deposits. Then how much risk should one take in investing in mutual funds which is linked to the capital markets? In my view, one should invest in mutual funds only if the money that is invested in the mutual funds is long term and truly long term, which means that this money is not required for at least 8 to 10 years by the person who is investing in the mutual funds. Secondly, one should be comfortable in losing at least 50% of the capital during the difficult times, which are similar to what is happening to the markets now. If you understand these risks, that the money is not required for at least 10 years, and if you're wanting to create that wealth for the next 10 to 15 years, then it makes perfect sense to be invested in mutual funds. If not, these instruments are not for you. You can also invest in mutual funds directly with the company. They are called the direct plans. You can avoid paying commissions to the mutual fund distributors. The savings that you generate over a period of time is substantial. And if you want to know the amount of savings that you would be generating by investing directly with the mutual fund companies, click on the link below and then look at the savings. These are very bad times in the capital markets. This is not new. This happens at least once or twice in a decade. Don't panic, stay invested. If you have spare income that you don't need for the next 8 to 10 years, then please continue your SIPs. If not, give it a serious thought. Don't listen to the mutual fund distributors, the so-called financial advisors. These are difficult times for people who have invested in mutual funds. If you need money, then you have no choice but to incur losses. If you can wait, you must wait for the markets to recover because you have already invested your hard-earned money the last couple of years, which you would want to see, if not returns, but then at least the principal should come back to you. I strongly urge all the mutual fund distributors to explain the risks to all the clients in detail. Number one, ask them if they would need the money in the next 8 or 10 years. Number two, assess the risk profile. These are my views. Let me once again reiterate that I am not a SEBI registered advisor nor a mutual fund distributor. Please discuss your financial needs and your risk appetite with a qualified financial advisor who is certified by SEBI, and then make an informed decision to invest in mutual funds or in any capital market linked instruments. Thank you.